The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, largely, I think we could call it a risk-on day across commodities. Livestock on Monday, led by soybeans and soybean meal. Really strong market there. Looked like it helped pull the corn market to the upside too, while the wheat trade was a bit mixed on the session, but still got pulled a little bit higher thanks to the strength in beans and corn. Livestock had a good day too. Let's talk about it. What is driving the market to start the week? Joining us now for analysis, John Heimberg with Total Farm Marketing. John, good to catch up with you. Hope you had a great weekend, and I think for many of us, a decent start to the week anyway, coming in here with a pretty solid day across the board, across all commodities, John.
Very much so. And, good to see some money flow kind of come into the marketplace, and especially in grains, led by that soybean meal market, again, pulling those beans higher. We took out those most recent highs in meal, strong closes there. Obviously, that fuels that bean rally. That spilled over into that, extremely short corn market as we're getting closer to the harvest getting wrapped up here. So the money kind of popped in. Some shorts got covered today on the corn market. So we'll see what we get for follow through tomorrow. But then you just go across the board. Crude oil, dollar plus higher. Cattle, firmly higher. Feeders and hogs, triple digits higher. It was more than just one or two individual commodities here. I would say the broad brush pushed everything higher today and probably at least saved the wheat market from being negative, even though it still had a hard time catching a bid.
Yeah, wheat just kind of churned around there. And if anything, I think the strength in the other commodities helped pull wheat back to at least unchanged on the day. So that's the one thing we take away there. As we look at soybeans and corn as well, I think we can tie the two together in this instance anyway. South American weather. I know Brazil, hot, dry over the weekend in center west Brazil, and then heavy rain in southern Brazil. More of the same in the forecast to start this week. And that appeared to be what was really driving a lot of fund short covering in beans and bean meal, which in turn spilled over to corn. That's kind of what I had gathered. Is that what you gathered from Monday?
Yeah, I'd say that was the main strength of that rally, is what's going on with that Brazilian weather. And the models continue to stay, hot and dry. Now, there is some talk maybe about 10 days out. We could see some moisture maybe come in there. But then I'm going to compare that back to what we kind of saw over the summer months in June. And, it's going to rain and then it didn't rain. And it's going to rain and then it doesn't rain, So we'll see. Those longer range models are kind of worth the paper they're written on sometimes. So we'll have to watch how that plays out. But, there was some concerns in that marketplace. We don't have a lot of weather premium in. We're seeing good Chinese business. I think that was some of the rumors, too, that we could see even a little bit more of that, especially with President Xi in China, from China, and Biden sitting down this week. A little bit of good faith business here. So we'll have to see if some things come into play there as well. And after you kind of assess that USDA report, even though they raised the bean yield up, the report wasn't bearish for beans. I mean, yeah, we added 20 million to the carry out through the production side of things, but they didn't tweak any demand, and we're starting to see some decent demand right now. So that could keep that pile even a little bit tighter. So the combination of factors saw some really good money flow into it today. And again, soybean meal leading that rally. We're expecting Argentina to be basically out of meal here relatively soon. So that basically turns us to the U.S. market for meal, or what's left in Brazil. And Brazil's concerned about supplies. You're going to see them tighten things down very, very quickly. So, we got some prospects here. We could close today right at the top of this trend line that we need to get through over top that January contract. Some follow through tomorrow would be very impressive, especially if we can hold it. That could open the door for some really good money flow into beans. Maybe get us back up into that $14 handle. And get some price support in here. So we got some opportunities to make some sales.
The corn market, I know we set more new lows in December corn overnight before we got pulled higher by soybeans and some of the weather worries in Brazil. Does it look like we're maybe putting in a key reversal on these corn charts now and bouncing off these lows? Or was this purely just soybeans pulling this corn market higher and we should still be a little concerned? What do you think, John?
We'll have to see how the next day goes. On the chart today, obviously, we did new low in the morning here. Then we rotated that with significant gains. So a fairly good sized bullish reversal on the charts today. We'll see if that triggers any more money flow out. We're going to get the fund positioning for the commitment of traders. Excuse me, for the commitment of traders later this afternoon. It was paused last week due to the Veterans Day holiday. That's going to show a big short position in the fund. So they might need a little bit of squaring up on those positions here. Really haven't had a good reason to get out of their shorts at all, at least until maybe now that, maybe it's time to ease. So we'll have to watch how things kind of go the next few days. A couple things I'm really going to be watching. My first couple phone calls this morning were producers that have extra bushels. Crop was bigger than they thought. What do we do with them? So that hedge pressure might still come into play here as guys are making some sales, moving some bushels that they weren't counting on, as this crop continues for some regions to come in much better than anticipated.
Well, John, as we look overall at these markets, and you mentioned maybe some producers who have those extra bushels, I think depending on how this week goes, it should be pretty interesting, especially in this case of corn. If we can get corn futures back up towards that 5 handle potentially and have decent basis come with it a little bit here too, just depending on your location. I'd have to think maybe that could lead to some more farmers selling if this rally could move forward here through the week, corn and in soybeans too, for that matter.
Yeah, no, we got to be a little wary here just because of how we handled that last run to 509, on that Thursday, Friday. Very similar situation. Big, strong day on Thursday, bullish reversal, strong follow through the next day and going into the trade. Hit that key resistance, which for that March contract, probably going to be around that 509 December, around 495, somewhere in that area. About 485 in the December contract. And then we can see things flip over again on some selling. So we'll have to watch that. How is this going to be one of those prolonged runs, or is this going to be a bit of just a dead cat bounce, that mentality? So we'll have to see how tomorrow's trade goes. That will be the key. If we finish strong again tomorrow, then it truly might mean, hey, we got some money flow in here. My biggest concern is, do we start pricing ourselves again out of the export market? We still need those bushels moving. We're still struggling in competitiveness with that Brazilian corn, as well as Argentina corn on the marketplace. So our rally gets limited in that regard. So we'll have to just kind of watch how the next days play out. But for me, and again, you got a heavy supply year. We got a supply that is growing, as the USDA stated on the last report. That when we get these price moves, 13 cents today, you get another 4 or 5 tomorrow, 20-cent move, that should trigger some selling. And that could be a real limit to what we can see here in terms of the near-term upside.
I know as well, reports say that Moody's is planning to hold the U.S. credit rating at AAA, but they moved the outlook from stable to negative. And in terms of inflation and some of the worries in the outside markets and how that plays into the commodity trade, just wondering as we watch some of this outside market money flow and the stocks, et cetera, we got a lot of more inflation data coming up this week. I feel like that could be a catalyst in this market trade as well here the next couple of days ahead, John.
Yeah, very much so. Could the inflation trade get put back on again? And, and also we do have potential government shutdown issues this week. We'll have to see how that kind of plays out. Again, not hearing a whole lot of headlines right now regarding anything getting put together on a short-term spending package. But right now, again, it's just one of those situations where the people in charge in terms of either side really doesn't seem to care about fiscal responsibility, and they're going to go ahead and push the press here and get some more money printed. So it's just one of those ones that inflation's still in the game. The Fed still talked about it just the other day, and Chairman Powell's kind of an interview he did at the end of the week, that the interest rates still could come into this again. So this market may look at things and just say, we need to be a little bit higher here. We need to bring some inflation in. We don't have a lot of premium in this market right now. And again, with the weather story as well as the inflationary story, maybe we're just the funds are moving in. Very similar to kind of what we saw in the trade today. Again, a lot of green across the board overall today, just in the commodity space. Maybe kind of tells me that, hey, a little bit weaker dollar, a little bit of inflation concerns. We got to get some money flow into the commodity space.
We are having a conversation today with John Heimberg from Total Farm Marketing after a fairly good day across the board in grains and in livestock trade on Monday. John, let's go over to cattle and hogs. Cattle been beat up here the last couple of weeks. A pretty decent day to start things on Monday with both fats and feeders trading higher. I wonder your thoughts. Is this just a case of some of the general overall money flow and optimism to start the week, or could this be a sign that cattle are maybe turning around a little bit and trying to find some support? What do you think?
No, we got a little bit of squaring up here. We do have a cattle on feed report coming out on Friday too, and like some of the numbers I saw there for the estimates, placements again 106, cattle 101 or so, so we could see some cattle numbers kind of keep growing. So we'll have to kind of watch here. Retail demand was something that we were very concerned about. We saw those choice carcasses really fall apart in the last week or so. Cash trade obviously reflected the move in the futures market. So, we did put a little bit of a turn on Friday's charts. Good to see a little follow through today. And we saw this back in October as we traded higher for 4 or 5 days. And then the floor fell apart again. So, I'm cautious here. I still got some downside targets that are very reachable in both lives and feeders. We are on some levels that could hold us here, but I think the money flow going forward this week is going to be very, very key. Just that we can continue to see some liquidation. Curious where the funds are. We'll see that again on the commitment of traders today, how fast they've gotten out of their long position that they've been holding for quite a while here in that cattle market.
And I wonder too, with that cattle on feed report coming up here, we got a fairly bearish surprise, I would say, in the cattle on feed report from October. So wondering if we could see any sort of surprises moving forward here, what that would do to this market. I think the overwhelming thought that I've heard from a lot of folks is that October report might have been a little bit of an outlier, because we know just how tight this herd is here currently and what the numbers should be looking like moving forward. So I just wonder, does USDA have any surprises left in terms of a cattle on feed report for this month, John?
We'll have to see when those numbers come out Friday. But like I said, some of those analyst expectations are pretty lofty, again, compared to last year. That's still the key here. Now, where are we compared to 3 years ago or 4 years ago? Numbers are still significantly tight. We're not seeing the expansion that we seeing the possibility of the cow herd growing. But when feed prices came down, the market was looking for places to get some cattle in, even though the feeder costs were extremely high on the input side. Now maybe we've got a little bit of value in terms of, those feeders coming down to the points they have. So I'm very open going into this report in terms of what to expect. It's going to be interesting to see how it wants to play out here. Now, we've still taken a lot of premium off this market and really sold it down here to the point where we're getting a little bit on the oversold side. But I'm still cautious. If those numbers come in heavier than we anticipate, just the general tone of the market, at least in terms of sentiment, has seemed to have soured here. It might be another opportunity for the funds to give this one more push, whether it's merited or not.
Hog market, same type of question, John. Do you feel like it was just an overall good money flow day and a bounce there in hogs, or what are some of the fundamentals you're watching in this hog trade this week?
It's an interesting trade. We're looking at that December contract. We've had a nice move up into this low 70s window, but now you can pretty much draw a line across the chart at $72, and we're trading both sides of that almost on a daily basis on that December contract. You got the cash index still trending a little bit, sideways to lower, still a little premium over that December. Retail values, again, is still something that's a concern. I'm not sure I like the fundamentals here yet in the hog market. Who knows? We're consolidating. Maybe we can get some push out. We're going to need to see those export sales numbers. Last week, we had a big round of sales, over 45,000 tons. China picked up 13,000. That was encouraging to see as they're trying to level out maybe some of the pork in their market a little bit. If those types of things continue, that can stay supportive. But it just feels like right now this hog market's trying to find itself some direction. Still a little bit cautious of those summer months as we're in those mid-90s. Better make sure so got some floor underneath there for some of those independent hog producers. Because if hog numbers still continue to climb, or we see feed costs come down and those numbers could go up, that's going to show up in terms of those summer hogs. So make sure you got some protection in at these price levels.
John, how about the dairy market trade? Any notes for us there real quick before we wrap it up today?
No, we got a nice move in the cheese market and the product market again today. So it's good to see some green in terms of that product. We've seen butter really come down off its prices. Cheese prices kind of holding that $16 handle. Again, you look at the charts overall, we got a bit of a flooring action. We'll see how far this wants to go back to the upside. But you got a pretty big price channel that kind of runs through here around that 1680, 1690 window on that December contract. We're holding that floor right now. If we break it, looks a little nervous to me that we're on a slippery slope, but maybe we can just get ourselves a little bit range bound here and definitely take advantage of selling the upside of this market, because overall it's still a downtrending market, and we're still kind of concerned about that overall demand for the dairy products again.
John, before we let you go, any final thoughts you would care to share or reiterate with folks today?
It's a volatile market. When we start talking weather, remember they can come in and go just as fast as those prices rally, and fast, maybe sometimes even faster to the downside. Those models are going to be interesting. The supplies, at least for corn, are still heavy. So anything we see here that's going to provide opportunity to build floors into the summer months, you need to take advantage of it. Realistically, Brazil weather in terms of the corn market might be more of a summer story, gets us a little premium here. But if we truly see some issues in terms of longer term, like right now, planting on soybeans about 30 days behind. That puts corn planting about 30 days behind. That misses some of those ideal windows. That might show up in some later export sales as we get into that July, August, September window, which could provide some backside support into the corn market.
John, if folks want to reach out to you and get some advice there at Total Farm Marketing, what's the best way to reach you?
Sure, give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And again, that website of ours, totalfarmmarketing.com.
With that, John Heinberg from Total Farm Marketing, always great to talk with you, sir. Have a awesome week, and we'll talk to you next week.
Sounds good. Have a great week.
John Heinberg there with Total Farm Marketing. That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.